conversation around another sector. The crackdown on polluting ceramic units in Gujarat has left several unorganized tile makers struggling to stay afloat. The order to use natural gas instead of coal is a problem as gas is more expensive. This is hurting costs, leading to price hikes, and that is sweet news to maybe the organized players who've been under severe pricing pressure. In a brokerage note on the sector, ICICI Direct says it expects a strong volume growth for the listed players in Q4. Let's try and talk about this with the analyst behind the report, Deepak Purswani. Deepak, good having you. Thanks much for joining in. What do you expect in Q4? Which companies will stand to benefit the most?
Yeah, good morning. In terms of the volume in Q4, we expect Kajaria's volume should grow close to the 13-14%. And even Somani on the sequential basis should report the better volume. And because of this ban from the NGT on the ceramic players, we expect there should be a incremental volume from Q1 because this has happened in the March. So major impact would be seen in the Q1 next quarter. And at the same time, unorganized players would also take the price hike to the extent of 8 to 10% to compensate for the rising cost because of shifting from to the gas units. And hence, we anticipate that the pricing difference between the organized and unorganized would also shrink, and hence there would be a better volume going ahead for the organized players.
Okay. Your report mentions about not just volumes but pricing looking like picking up as well. What's been the change as a result of all that's happened in the last 3 to 6 odd months? Is there been a sharp impact? What do you expect the next 6 to 12 odd months to look like on the pricing front?
So as I already mentioned, right now the unorganized guys has already taken price hike to the extent of 8 to 10%. This will bridge the gap. At the same time, on the organized front, they had already taken the price hike in the month of November. And going ahead, because of there would be a capacity expansion in the premium product category like GVT and everything. On the blended basis, their realization should improve. At the same time, they should be benefiting from the gas prices. As there has been crude oil has corrected from the peak from 85 to around 70, but this is not reflected in their pricing because of the contracted price they had. This eventually should come down to the tiles player with a lag impact. So if you see their gas prices in Q3, it was close to the 40 rupees per SCM. Now it should close down to, in Q4, it should come down to 38 rupees per SCM. In the coming quarter, it could come down further.
Okay.
Maybe around 35 rupees per SCM.
Okay, so you mentioned that, and you spoke about it briefly, that it will be margin accretive.
That way we are seeing, sorry.
No, sorry, I was just saying, I was taking forward that point that these falling gas prices from Q3 would be margin accretive for your tile, for the companies in your coverage universe. So there has been a price increase, there could be a margin uptick as well that has come in, and it could, another price increase or some pricing action could come in the new financial year as well. Putting all of this into perspective and keeping in mind that Q4 could be showing some interesting earnings trends, which are the companies or which are the top ideas, and why is it that these companies are the best ideas? I believe they are Kajaria and Somani for you. Yeah.
So broadly speaking, in terms of on the sector, we are positive. As I already mentioned, there are the multiple tailwinds which are available for the sectors, and hence there is a possibility of earning upgrade going ahead because of these triggers. In terms of the earnings, we are anticipating Kajaria's earnings should grow at around 28% CAGR during 19 to 21. And we have the buy recommendation on Kajaria with a price target of 690. And we anticipate there are the more triggers for the Somani, as it was also going through the operational disruption few quarters back. Now everything has settled down, and hence the earning growth would be much better. Because of the low base of the Somani. So we anticipate their earning would also grow at a 55% CAGR, and we have the buy recommendation on Somani with a price target of 500.